It's 5 p.m. and I would like to welcome everyone to this session at World Water Week. My name is Carolina Latorre and I'm a program manager for the West Foundation, and I'm together with Valentin Post today. Valentin.
Good morning, evening, night, afternoon. I think I have them all right. My name is Valentin Post. I'm the CEO of Finish Mondial, and it's my pleasure to welcome you together with Carolina to this what's promising to be a very exciting session. Carolina, over to you.
Indeed, Valentin, yes, we're very excited to have everyone here. We're going to have a very interactive session. So today we're going to be talking about result-based financing, but Valentin, why are we going to talk about result-based financing?
Well, as we all know, and it's not only those who are attending Stockholm for the first time or maybe many times, the need and demand for sanitation financing is much more than the supply. And we all know that the current ways of doing is not going to change it by the margins which are needed. So to solve this, we have to look for innovations in the sector and the way we do our businesses. So what we are looking at is actually how can a public good, which sanitation after all is a public good, how can we get private financing into this public sector domain in a way that's smart, efficient, and is inclusive. So what we are going to do is tonight we're going to talk about two innovations is bringing this kind of financing into the sector. One is which is at a very early stage, that is result-based financing for outcomes, for sanitation, and that's in Uganda. And we'll start a session with that for the first 1.5 hours. And that will be a super interactive session because we are at an early stage. One of the panelists actually said this is a very courageous thing to do. And it can mean everything, right? But normally that's not, well, it is courageous. Let's put it like this. So we're seeking your inputs, your help, your assistance to really get this off the ground. The second initiative, which we're going to talk about in the last hour, is more advanced, and that we anticipate to launch by the end of this year, 2021. So what we'll have today is the first festive moment in what we hope are going to be many more festive moments. This is going to pre-launch of the Sanitation and Water Impact Fund. Over to you, Carolina.
Thank you, Valentin. Yes, and so as you sort of outlined the session today, I'll just remind everybody that it will have two parts. The first 1.5 hours will be zooming into what we're doing and in Uganda and some of the experiences that we've collected so far there, and we'll be actually hacking these ideas with the help of the audience today. In the second part, and at 6:30 sharp, we'll start with some champagne glasses and welcoming everybody to join the celebration of the pre-launch of the Sanitation Impact Fund series. But we'll talk more about that shortly. First, some housekeeping rules. Please don't forget, this is a hyper interactive session, so we're really looking forward to hear from your questions, comments, so post them in the Pathable platform, and we'll be monitoring them and introducing them to the speakers and the panelists. We also have something really special, and I would like to ask you to put your camera on, Jimmy, and say hi. Jimmy Patch is joining us from Australia, and he will be doing a graphic recording of the session today. So we'll pop up with Jimmy from time to time and see how is it going and how all these ideas are captured in your graphic work. Jimmy.
Thank you, Carolina. Hello, everyone from Australia. Yeah, please do check in on me. It's 1 a.m. here, so just make sure I don't nod off. But look, really looking forward to this session. I'll be here drawing away on my iPad, and I'll share from time to time so you can see the progress on how it's all coming together. Looking forward to it.
Thank you, Jimmy. We're really curious to see what's going to turn out of this session. And just going back to these ideas that Valentin, you were talking about, I would like to show everybody a video that will describe a little bit more what Finish Mondial is doing about result-based financing and the work we're doing in the countries.
Finish Mondial is a partnership between Waste, AMREF and Aqua for All and stands for Financial Inclusion, Improved Sanitation and Health. It's a programme working towards safe sanitation for all and is implemented in India, Kenya, Uganda, Ethiopia, Tanzania and Bangladesh. Finish Mondial ensures people are aware of the need of a safe and durable toilet. They want to buy one, can afford it, and local people can build them. But what does this mean? Women like Anna from Kenya and girls like Juhi from India have a healthy and safe life and can develop themselves. They can work and go to school as they no longer get ill because of water-related diseases. Because of the Finish programme, sanitation marketeers like Emmy from Tanzania feel they are doing something for their community as they tell people about the importance of a safe and durable toilet, which trained masons like Manu from Ethiopia can build. They now run a successful sanitation business. And farmers like Abdul from Bangladesh use the fecal sludge from the newly built toilets as co-compost for crop production. Therefore, communities are healthier and have climate-resilient food. Finally, financiers like Mr. George from Uganda supply sanitation credit, and local governors like Miss Gamutu from Kenya stimulate sanitation market growth and awareness. By applying a multi-stakeholder approach, the Finish programme involves the entire sanitation value chain. Over 5.6 million people enjoy the benefits of safe sanitation thanks to the programme. This is only the beginning. Let's create a global sanitation revolution together.
Thank you for that, Lauren. Valentin, shall we start with the first part of this session?
Yes, please. We're going to start with bottom-up result-based financing, paving the way for social impact achieved by local sustainable sanitation systems. It's my great pleasure to invite Rob Mills of Social Finance, one of the architects of the Sanitation Impact Bond, which was piloted in Cambodia some time ago, to give the keynote address. Rob, over to you.
Welcome, Rob.
Everybody,
Rob.
I am here. I'm just trying to find out how to switch my camera on.
Yes, we would like to see you. But while you
Good.
find that, we're going to start with you today on a bit of a high-level presentation, right? And we're going to ask you about the new ways to fund WASH programs, and in particular, moving from funding inputs or activities to paying for outcomes achieved.
Exactly.
So,
Now, I think someone is there who can probably switch my camera back on, but rather than me fiddling around and actually looking at me is not the most important bit. I suggest we just carry on.
yeah, I think we can start. And I think Valentin has a question for you.
Good. Let's go ahead. Valentin, you're on mute.
Yeah, I was on mute. Sorry. It's very silly.
It's a little bit late in Europe.
I feel very embarrassed. Rob, what's the problem with the usual way of financing WASH, in your view?
Okay, so let's start with that kind of basic question of what is the downsides or the shortcomings of what I'd call traditional grant-funded programs. Just before I kind of go into any of these details, I want to just make a point that what I'm talking about is particularly true when it comes to tackling tough social challenges where previous efforts haven't really produced results and the problem persists. And I think we can all agree that that's often the case for improving access to sanitation. What I'm saying doesn't apply to the whole world. It's in particularly tough situations. And in my experience, there's at least 5 shortcomings of traditional funding with normal grants. The first is the programs tend to be focused on inputs, not results. Traditional projects are really good at ensuring delivery of a kind of pre-agreed set of activities with a pre-agreed rigid work plan. And the project itself may have a kind of lofty aspirations to deliver the SDGs, but there's often a weak link to actually achieving the results that matter. The incentives to deliver, the accountability for results, thinking about who bears the risk, these are often missing in a traditional program. A bit more specifically, traditional grant programs tend to lack a built-in live mechanism for feedback to measure what's going on, There's not enough emphasis on collecting and analyzing data in a way that can really kind of feedback quickly into the program, rather than waiting for an M&E team or a meal team to turn up 2 years later. And that really impedes impedes the learning of what's actually happening, or more importantly, what's not happening on the ground. And the third point here is around barriers to adaptation. So even in a situation where you have good data about what's happening on the ground, in my experience, the bureaucracy of a traditional program to adapt the work plan, to do something different, is often very high. And it impedes the ability of the project to really adapt and pivot in real time in response to information about what's happening. 2 more points. One is a slightly kind of technical point about contracting, which, again, in my experience, tends to favor the status quo. So for programs that are procured, and that's not all of them, those that are procured, of course, robust procurement is really important to manage fiduciary risk, the risk of money going astray. But tendering just for the inputs, tendering for the activities, particularly if you have a fixed budget or a fixed price contract, tends to favor the larger players who have got great procurement teams, who are incentivized to deliver, frankly, what they've always delivered for the least cost and, frankly, for the least effort. And that tends to favor the status quo. And lastly, but very importantly, again, in my experience, a traditional grant funding approach tends to have limited incentives to innovate. If you have an organization that's been funded with a grant, has been told to deliver a pre-agreed set of activities with a fixed budget, then frankly, what's the incentive to innovate? Why take the risk of doing something new? That for me is a set of kind of shortcomings of traditional grant-funded programs. And we can discuss later in the groups whether any of that really resonates with the audience.
Okay, Rob, that's very interesting, but this is all about what are the downsides. So what are you or your organization proposing as an alternative?
Okay, so, oops, I'll go back one. What I propose is essentially a new way of working that's all built around about outcomes. And the basis of the funding is on delivering outcomes. So essentially, it's a saying that if we want to be kind of genuine about using our resources in a kind of a wise way, then we need to change the behavior of actors in the funding relationship. And that means both the service providers on the ground, but also the funders themselves, so that everybody in the program is aligned around social impact and social outcomes. That's a bit abstract, and I've put out here 6 kind of active ingredients, I guess, of what outcomes-based funding means in reality. So let me run through them. The first is the importance of accountability for results. So if you are funding outcomes, it's really clear who's accountable for the impact of the spending. And that's not always the case when you have a traditionally funded kind of program that just funds the activities. Second point around sharp, but also shared incentives. So if you design your funding for a program well, it can really sharpen the incentives to deliver. But it can also be a mechanism for aligning everybody around the common goal, which often isn't the case. A third point around this way of working is creating space to adapt and innovate. As I mentioned, funding that requires a sort of fixed set of activities delivered in a kind of preset way is often not a good way to tackle what is a dynamic and complex problem on the ground, particularly SDG 6. At the front line, there has to be space for those who are implementing to learn, to respond to what's happening on the ground, to form new partnerships, to try something new. And that has to be built into the way the program is funded. 3 more points. One is around the importance of data and measurement, and we may come back to this actually in the breakout groups. If you want to be able to adapt your program according to what's happening on the ground, and what's going well, what's not going well, then you obviously have to have information and data on what's happening, and to have access to it quickly and to ensure it's reliable. So really having an emphasis on data and measurement at the heart of the program implementation. A slightly more subtle point. This was my attempt to find a graphic which would show the idea of risk appetite. It's really important that risk, whether that's financial risk or operational risk is allocated to the party that has the appetite for it. Now, in my experience, and I haven't talked much about my own background, but in my experience with working at a large donor, there's a lot of risk aversion. And so the risk gets passed on to those who perhaps aren't in the best place to take it, which is the frontline service provider. By contrast, someone who's playing the role of essentially an investor, who's taking on risk, is looking to take that risk and potentially to get some sort of reward for it. So the point really is, allocate risk to those who have appetite for it, allocate risk to the right party. And the last point around novel partnerships, if you'll excuse the photo, the idea is, in a program that's trying to do something different, you may need to bring together partners that haven't necessarily worked together, and to get them to form around a shared set of objectives. And there has to be a way and a space for doing that. So those for me are sort of 6 of the key active ingredients about organizing your funding in a way that delivers outcomes.
Thanks, Rob. It sounds good in theory, right? But how does it work in practice? Can you elaborate a little on that?
Yeah, no, that's fair enough. This is all theory. So let me talk a little bit more about how you might do this in practice. And this is kind of drawing on a program we helped put together in Cambodia. It was a rural sanitation impact bond. And for some reason, I'm having slight problems with the slide. Let's take a look. Here we go. I think there's just a slight delay. Okay, so sort of the basic mechanics. Now, ideally, I'd have a kind of a way to sort of take you through this piece by piece, but let's just, actually, let's not start with the numbers. Let's start with the most important bit, which is the target population at the bottom. I mean, a lot of programs just kind of dive into, who's paying for what and some of the kind of technical stuff, but let's always start with the target population, those who are going to be part of the program or potentially benefit from the program. Understanding who they are and what the issue is clearly the starting point. Then, if you look at the arrows and the numbers, let's start with the outcomes funders, which are hopefully on your left-hand side, and the social investors. This kind of program, you will have a contract between those two parties. And the point being that payments from an outcome funder only flow to the investor in the program, contingent on outcomes. In other words, if outcomes are achieved, the outcomes that you've agreed at the beginning, if they're agreed. Then the idea is that someone has to put up money up front, and that's social investor. And we're not talking about commercial investors, we're not talking about high rates of return, we're talking about someone who's prepared to take risk, but would like to see their capital back, perhaps with a small return. And they provide working capital to the sanitation enterprises that are at the heart of these market-based approaches to improving sanitation outcomes that we're going to be talking about. There's a small asterisk there saying, okay, in the case of programs that Waste or Finish Mondial or Water for People run, you may actually be a kind of a catalyst, a non-profit catalyst for a larger group of smaller micro enterprises which you're working with. And that was the case in the Cambodia impact bond. Those sanitation enterprises then work with the target population. And I guess the key point is that they're not delivering a program for a donor. They are improving social outcomes as part of their usual business activities. They're not contracted to do something else. They're just the usual business of thinking about the customers and marketing and keeping an eye on costs and charging where possible, all the things that the businesses do. And that will improve social outcomes because they're social enterprises, essentially. There's an arrow for a verification that those have been achieved. And we'll talk more about that later. And then the fifth arrow is essentially saying, okay, if it's been achieved verifiably, then the outcome funder will pay back the social investor for the capital, the working capital they've put in, and for the risk they've taken. That's the basic model. Now, you might say, well, let me see if I can just get a slight delay here, but let me see if I can get one slight tweak on this, which is that you might ask why an outcome funder would pay an investor. Good question. So instead, you might have the number 5 arrow having funding going directly to the sanitation enterprise. And that implies a slightly different role for the social investor. And it implies you wouldn't have a contract between the outcome funder and social investor. But that's details. Let's not worry about it. Let's move on. How's that so far, Valentin, for a kind of a bit more kind of practical idea?
That's good, Rob.
Yeah, I think I would like to ask Carolina the same thing.
Yeah, no, I just wanted to ask you, I mean, it makes a lot of sense at what you're saying, but maybe you can tell us a little bit more of when this way of working is really useful.
Yeah, and let me not sort of pretend that this is right for all times and all places. There's essentially adds value in certain situations, but it needs to be feasible to do. So as I was trying to say at the beginning, this is not trying to kind of deconstruct the whole of the world of development assistance for WASH and replace it. It's saying in certain situations, this can be a better way of working. So there are probably four things to think about in terms of can it add value. One is that the problem you're trying to tackle is complex. You're working in a complex market ecosystem, lots of actors, possibly a situation where things haven't worked well before, but the outcome everyone's trying to get to is clear and can be defined and measured. That's important. A situation where upfront capital is needed, where someone should pay for things upfront. Essentially, that means taking on the risk of things not working. It can add value when you have an intervention that's promising, but there's some risk. Now, let me just sort of add to that. In this program in Cambodia that IDE ran, it wasn't a brand new program. They hadn't just turned up in Cambodia and said, oh, let's do something new. They've been there for many years, building up local partnerships with micro entrepreneurs. But what they wanted to do next was essentially an evolution of their program. It was scaling up, it was doing something slightly different. So it was promising, but there was nonetheless some risk that it wouldn't work. And lastly, the point is that optimal sequencing are known in advance. What do I mean? I mean that if you're just kind of trying to build something simple, like, I don't know, a set of piped water connections, and just having to kind of connect households. Well, that's pretty easy to do. You just contractor to do it. What I'm talking about is programs such as market-based approaches, where you don't quite know what's going to be the right route to delivering the results, and actually you need room to adapt and learn as you go. And so in this situation, in that situation, the kind of approach I'm talking about can add value. And I do want to just sort of caveat that this way of working to be useful, it has to be feasible. So there's 4 other points here on the right-hand side. So the outcomes that you're looking for, that you have to be able to measure them, obviously, and they have to be attributable, which means they have to be things that you can say, well, the program resulted in these outcomes, not something else happening out there. And so the attribution is important, because otherwise, why would outcome funders pay for it? It has to be a priority of government, of donors, and of local communities. There has to be some kind of capacity on the ground to deliver. Just turning up with a kind of greenfield intervention where you really have no sense of how you would deliver this, that's not going to be feasible. And the point I come back to repeatedly is having data that's reliable and timely, which you can use to keep adaptively managing your program. So that's when I think this way of working can be useful.
Yeah, thanks, Rob. Great. Any final thoughts before we go into the Uganda case?
Yes, I'm glad you asked that, Valentin. So let me just add two more thoughts. First is a caveat, which you may have heard from other people at World Water Week. It should be obvious. Make sure you distinguish between what the actual intervention is. In this case, we're talking about markets-based WASH programs. Distinguish between that and what the role, if any, if it's suitable, of innovative finance to deliver that intervention. They're not the same thing. So what I'm trying to say is that well-prepared innovative finance is not going to solve for an inappropriate or poorly prepared intervention. So you have to have a well-prepared intervention and then think about how best to fund it. Hopefully that's obvious. And the last point I want to make is a little bit more subtle, that in this whole world of innovative finance and outcomes-based funding, there's a lot of talk about instruments and investors and all this stuff, which is good, but there's often a tendency to focus too much on the instrument and not on what it's trying to do. So my last thought here is to keep focusing on the why. Why are you doing this? And this little word cloud is something I did with my team. We kind of took a step back and said, why do we do this work? And let's just kind of do a word cloud exercise. And it's not about impact bonds or outcomes-based funding or whatever. It's really about these things, all of which are the active ingredients of delivering results that sustain over time for the kind of tough social challenges such as improving access to sanitation.
Thank you, Rob. That was a very interesting discussion. And now I think this is a great introduction to tap into and zoom into Uganda. So I would like to invite Danny Dubeldeman, Head of Programs of AMREF Flying Doctors, Pamela Kabasinguzi, Country Coordinator of Finish Mondial Uganda, and Kate Nimanaya from Water for People to join us in this discussion and tell us about the lessons learned from past programs and future ambitions in innovative financing in Uganda.
Yeah, thank you, Carolina. Yes, in the next 20 minutes, we will try to color the landscape of result-based financing a bit more with experience from Uganda. And for that, we would like to give the floor to Pamela and Kate, who have a lot of experience with this. And they will share with you their experiences, their lessons learned, and their ambitions in innovative financing. Like Carolina already stressed a couple of times, we would like this to be an interactive session. So if you have questions, comments, or remarks to make, please put them in the chat, and we will come back to that later. Pamela, let me start with you. Can you, as a brief introduction, share your experience with market-based approaches in Uganda with us?
Yeah, thank you so much, Danny. My name is Pamela, as you've already heard. In Uganda, Waste Foundation and Water for People have been employing market-based approaches to accelerate sanitation access in the country. And as we use the market-based approaches, we actually focus on three markets. That is the rural communities, the small towns, and the urban centers. And these programs have been purely grant financing. And this has been our experience. I'll give the experience of about 1.5 years. Next slide.
Okay, thank you, Pamela. Oh, I'm sorry, please continue.
Yes, and our market-based approaches follow the sanitation chain. We have our client, who is the household, and we create demand at that level. We do we do our marketing, our sanitation marketing, and then we have, when the demand is created and there is already demand for that facility for sanitation, then we look at the financing. There's need for investment in that facility that you are demanding for. So that we have two types that we do. We go for financial institutions, we pitch our business there for sanitation, and then we build the capacity of the financial institutions. We make linkages for the households, our clients, to find loans, to find finances in order to construct the facility that they want. And then we also have the VSLAs, the SAPOs, and the small lending groups within. And these, we work with them. And then on the other side, we go to the entrepreneur. We have the diamond approach, where we work with the entrepreneur we build the capacity in order for them to be innovative, to lower the cost of a facility of sanitation, and make sure that at least the clients that we have created demand are able to construct a toilet. And then we work with the enabling environment. That's the government. The government comes in order to help us regulate and make sure that the technologies we are encouraging the clients to have are actually qualified and certified by the government. And then we also look at the whole system working together. Our aim is to make sure that the system works together in order to have a sustainable sanitation working. That's why we use the diamond approach in the country, looking at the different stakeholders and putting them together and making sure that they are working together to ensure the sustainability and acceleration of scale. Next slide. Yeah, and of course we look at we have seen several in my life as a career woman that is over 16 years. I have learned lesson that it is possible for a household, a client, to change from one sanitation facility that is not sustainable to a sustainable facility that can be reusable. And it is also in my life, I've seen that in the last 1.5 years, I have seen about over 3 million euros being invested in sanitation, in loans. I have seen over 18,000 households coming up with sustainable, safely managed sanitation facilities. And this has gone with a loan recovery rate of 98%. There's a strong base for business case in sanitation. We have employed about 1.2 million man hours recorded in construction. So about over 100,000 people have access to self-managed sanitation facilities in the country. And to me, this is something that has really has never been seen in a country before. And that is when we have been using grant money. So we would like to see how best can we employ other means. For example, if we employed result-based and all that, how best can we have even much more on that? Thank you, Dan.
Thank you, Pamela. And it's wonderful and very impressive to see how many stakeholders are involved in your program and all the different elements that are included. So it's well, quite a complex puzzle to make in the end. And also impressive to see, looking at the numbers and the results, that you that there is a strong business case. But like you also mentioned, we do have a business case right now, but we still finance it the traditional way. So Kate, let's move over to you, and maybe with an introduction, why, in your opinion, is it important to look at other financing mechanisms, innovative financing mechanisms, other than traditional donor funding?
Thank you, Danny, and good morning, good afternoon, everyone. It is important to look into other financing solutions like outcomes or result-based financing due to the following limitations of traditional grant financing. Some of them Rob has already mentioned. But with a focus on Uganda, you find that national or city level governments are not incentivized to invest in other market actors. For example, the private sector, much as we know it's very important, but they wouldn't, in order to deliver development of sustainable services and systems that safely contain and treat human waste. So they wouldn't easily invest into that that market, that particular chain. And then in addition, grants are usually time bound. Once they are provided, they emphasize delivery of specific activities. For example, trainings. Donors usually just count trainings or capacity building events, really focusing on inputs rather than creating sustainable systems that can stay in place even after a project ends. So financing solutions should be focused, in my opinion, on paying only when improved and sustained outcomes are achieved. And this can be even beyond project periods.
Yeah, thank you, Kate. And how would that work in daily practice? How do you move from traditional grant funding to result-based financing?
Yeah. So with Water for People and our waste, we've come up with this idea, learning from others, and we feel that we can initially have an impact investor that can provide us with input or upfront working capital, and this could be social investor or public sector or any other donor or some of the foundations we know of, anyone who is interested in a combination of financial as well as social returns. Then in step 2, we find that once we have this working capital at Water for People or waste country programs, we can be able to scale existing sanitation markets, based sanitation work similar to what Pamela presented, and we can achieve pre-agreed sanitation outcomes with them. So the funds can be used in a variety of ways, and majorly for facilitation. For example, if you're looking at the sanitation value chain, looking at incubation of pit-emptying enterprises, provision of working capital to finance institutions, or subsidies for informal settlements. The objective is really to see how we can remove any of the barriers in sanitation provision and allow for complete flexibility and adaptation to achieve these outcomes. Then in step 3, we'll have an outcomes funder who, with the predefined sanitation outcomes, when these are met, and usually we can have verified or it can be an independent source like an audit firm. Once the outcomes, the outcome matrices are met, then the outcomes funder then repays usually the initial working capital that has been invested by the social investor, along with a small return. And this outcomes funder can also be a donor or the public sector. We believe that they can also come in as long as they're willing to pay for verified results. So generally, we're looking at anyone who is aligned with interest in social returns. And down here, we have an example of some of those outcome metrics. And they can be either looking at percentage of households that are sustaining the use of well-managed, improved sanitation facilities, or in rural areas, we can be looking at volume of sludge that is safely managed on site, or in urban spaces, we can be looking at volume of sludge that is transported and actually reaches the treatment plant. So we believe this kind of innovative financing can lead us to a more sustainable system.
Yeah, thank you. And that indeed, it points the incentives for every stakeholder into the right direction. Could you give an example of outcome-based financing in your programmatic work?
Yeah, we've envisioned this looking at our work in Kampala, and I'm just looking at maybe one metric, outcome metric, on, for example, collection of fecal sludge. So Kampala is capital city of Uganda. So the outcome would be looking at safely managed sanitation in the city, and with a focus on volume of sludge. For example, would set our outcome indicator of maybe 3,120 cubic meters of sludge emptied in per year, and this is specifically from low-income settlements. And then it's transported and treated off-site. So what this would mean for an outcomes, for an investor, for example, a social impact investor would invest about $100,000. So, and this fund would go to Water for People and Waste. And if successful, the investment per cubic meters of sludge that is safely managed, the outcome investor would be paying $40 per cubic meter. So we are looking at an outcome. If we achieve a target of 3,120 cubic meters, which is actually a real figure when it comes to the low-income households in Kampala, we are looking at $124,800 raised. That means we're paid 100,000, including a margin of 24.8%, which would reinvest in our programs again.
Yeah.
Yeah.
That makes it an investable case. Eh? And maybe Kate, as a summary for now, and maybe a starting point for further discussion, also looking at Carolina, how much time we have left. Could you share with us as a summary the benefits of result-based financing for sustainable sanitation?
Yeah, so some of the benefits I can highlight, we'll see more catalyzation of investments in sustainable sanitation market systems. We'll know that we have systems in place in very many cities and towns. And then it will increase partner performance to deliver either toilets. Remember, we're not looking at only maybe pit emptying, but the whole sanitation value chain. So we'll have performance along the chain, and we have clearly defined long-term results that are sustained way beyond an NGO or a partner. And then this innovative financing will provide a new way of financing for outcomes, really looking at outcomes and not just ticking off activities. Those outcomes are impactful and would definitely allow us to achieve the SDGs. Then we'll definitely see a lot of innovation coming up. How do you engage with the private sector? How do you incentivize the informal settlements? We'll be seeing a lot of innovation coming up because the price is on the outcomes. And then we'll be aligning all actors around these consistent outcomes for sustainable sanitation.
Yeah, thank you, Kate. Do we have time for questions, Carolina?
I think we're running a little bit behind, but we have time for maybe one question. Let's ask Janine or Lauren. Do we have any questions from the audience for Kate or Pamela? No? If
Can
we
I ask
don't,
oh, I'm sorry.
Yes, please go ahead, Danny.
Can I ask one question to Kate and Pamela? Of course, what we see here is that result-based financing can bring a lot. It gives us the opportunity to use scarce donor funding much more strategically and achieve more with less. It also can bring in a flip side, and that's also what Rob explained in his final slide. Why in the end are we doing this? And the flip side, when you include a market-based approach in your program, can also be that stakeholders follow the results. And how can you ensure that your program is still inclusive and also reaches those who are the hardest to reach in the end and probably need it the most? Kate or Pamela? Can you, how do you look at that?
Yeah. One of the reasons, the issues that we can look at is we have leverage from the government. The government has programs that they have, actually, government of Uganda has a sanitation fund. So that fund can be used to have all inclusive, including the poor who may not be able to afford that. That has been the practice in the Rwenzori region, and we have engaged the government to make sure that those who cannot move with getting the bank, for example, they may not have an asset they may not have the bankable applications to the bank, so they are able to go to, we engage the district to work with them at the local government level, to work with them so that everyone is not left behind. But also the government has already identified those households that cannot, looking at the parish model that now is being developed, We already have the numbers of categories of different households at that level who may not be able to afford a sanitation facility. So the government looks at that as we also support them. Kate, over to you.
Thank you, Pamela. I would just add our program, together with Kampala Capital City Authority in Uganda, actually it's an inclusive program. So I see even the outcomes when it comes to outcomes funding, you know, including that as one of the matrices. And in order not to reach, not to leave anyone behind, KCCA and Water for People are implementing an incentive-based model for sanitation, where households can be able to acquire loans or pay in installments for toilets. So those can actually be parts, and as well as having innovations around a scheduled pit emptying. So it has to be intentional to go out in the informal settlements, and the tracking actually focuses on sludge from such informal settlements or communities that are actually left behind. So lots of innovation that can happen so that no one is left behind.
Thank you, Kate. Thank you, Pamela, for this clear answer. And before handing it over to Carolina, thank you so much for giving us and sharing with us all your insights, the Uganda case. And it's a wonderful discussion, and to see how result-based financing can, well, enable us to do more with less in the end. Thank you.
Thank you, ladies, and thank you, Danny, for leading this discussion. But this discussion is not over. What we want to invite everybody now is to join the discussion and actually participate actively. I saw some questions for Rob, and I won't read them now because Rob will join us after the hackathon in the panel, so we'll move them to that part. And now I would like to invite everybody in this session to hack the Uganda case. So we want to go from challenges to solutions in the novel result-based funding of sanitation ventures. What we will do is we'll divide everybody in one of these three groups. The first one will be led by Rob, actually, so you can continue the discussion with Rob Mills from Social Finance on what outcomes should we measure and how when we're working on this. The second group will be led by Jesse Shapiro from USAID. Welcome, Jesse. And this will be about who pays for what. So Jesse will be guiding that discussion. And the third question that we have for you as participants is what stakeholders and what roles to get the best from RBF. This one will be led by Brenda Akiro Muthemba from Water for People, who is a colleague from Kate. And so you can continue that discussion as well. After 20 minutes, everybody will be invited to join back this main room, and we'll have a panel discussion with everyone, and we'll have some other guests, and that discussion will be led by Jacqueline Barense from Waste. As we gather here, I might ask Lauren, if you're around, can we see how Jimmy is doing with his record?
Yes, Jimmy, if you're back in the room, you can already share your screen.
Sorry, was that for me, Carolina?
Yeah, Jimmy, we're curious, how is it going?
Yeah,
well,
no problem.
Everybody comes back to the main room, we wanted to see how you're doing.
Okay, one sec.
That's fantastic. And still we have one panel to go. So thank you, Jimmy, for showing us this this part. I would like to ask Valentin, what do we have next?
Next is a panel discussion, which will be chaired by the lady who's on the right of my screen. That's Jacqueline Baretse. She used to be in the banking sector. She's been working extensively on sanitation, and she is an advisor in the World Bank on result-based financing. She's gonna chair the panel, and she's gonna introduce, if they need any introduction, the participants. So over to you, Jacqueline.
Super. I don't know if you can see and hear me. That would be good. And thank you, Jimmy. Jimmy, I like your drawing. Just make a few lines there so it's super clear, and then we have solved it. Yeah, that's then the good result of the hackathon. Now we know it's still a difficult topic, and result-based financing is something you have to figure out. It's a puzzle. You have to lay all the elements. Okay, I'm really happy to have to welcome you to the panel. And there's 3 parts there. I would like to ask Rob and Jesse to come back on their part, the breakout session with the 3 main points which they picked up from the session. Then I really would like to hear the views from Martha Naigaga. I am already sorry for the way I pronounce your name. And from Alan, now maybe I shouldn't even try your last name, Alan. Really very interested to hear your views, especially also on the cases which we got presented from Kate and from Pamela, and how you see your role in that. And then I know we have questions from the audience. So Carolina, Lauren, Janine, please have some questions ready. So we have to reduce the time, so let's start quickly. Jesse, we start with you. Could you just come back to us with 3 main points you picked up from the session just now?
Yeah, thanks, Jacqueline. So the group I facilitated was focused on looking at who pays for what in the results-based financing system or outcome-based aid system. And I think one of the main points was that while there's some obvious actors that could fill those roles, like for instance, government in the role as the outcome buyer, that's not always the perfect way to do it. And actually any actor could fill any role. So there was some experience that a government could also fill the role as the social investor in a smaller set of cases, or be the outcome buyer. Companies could have a role, donors could have a role. So really you need to design that puzzle, as you called it, and look for the perfect role for each actor tailored to that situation. But there's not one size fits all. There's also other actors that could be part of that universe, utilities, other companies, basically anyone tailored to that situation. I think another key point was really that when designing your mechanism, you need to look at more than just a static result, but maybe something that's dynamic and could change over time, like markets do themselves. So for instance, if a result was being paid out at a certain rate, that could actually change over time as the system and the market system gets strengthened, and cost and risk can be transferred to other actors. And that it's also dynamic in that way that things just may change, and so you need to pay different rates or shift roles of actors over time. Even that there's a lot of actors that could be benefiting or paying for results, and those may shift, or the mix of those may shift over time. The last point I'll just bring up is that there are a lot of examples of effective result-based finance already in the sanitation sector. There was a couple examples brought up from Cambodia. The companies of Sanergy and Sanitation are looking at these mechanisms as well. And so there's a lot of examples to pull from, and people should look at those.
Yeah, okay, well, thank you very much. Rob, can you please provide some feedback on your session?
Sure, so we were looking at what to measure and how. We started with framing it by saying results can be quite broad. We can talk about outputs, we can talk about outcomes, and we can talk about sort of final impact. So, where should we aim? I think we all agreed that the kind of building block, the baseline of quantitative numbers on, for example, in the Uganda context, the number of people with access, the number of latrines installed, is a starting point, but insufficient, necessary but insufficient. We need to build on that. And we talked about 3 different areas. We talked about the importance of sustainability, so enduring use of systems over time. We talked about thinking about the entire chain, not least as a way to demonstrate that use is happening and that the SDG 6.2 is being reached. So we talked about thinking about the volume of waste transported. We talked about the further on the chain towards treatment. And then the third area we talked about in terms of essentially kind of ambition beyond outputs was thinking about who, the socioeconomic profile of who might be benefiting from this funding. So those are sort of three areas of kind of ambition to go beyond simple outputs. And then we had a discussion about going towards final impact, the importance of making the link between the wash sector and the health sector, thinking about things like changes in household income or even indeed employment. But a recognition across all of this that the more ambitious you are for social impact, the more risk there is. And so we finished actually with a very interesting point around, well, as you move along that kind of ambition chain from outputs to outcomes to final impact, data is harder to collect, attribution is harder, and there are more kind of confounders of making the link between the program and the result. And so in that situation, you may switch from more quantitative measures to more qualitative measures of improvements in people's livelihoods.
Can I almost stop you here, Rob?
That's it.
Yeah, thank you very much. And oh, by the way, it's interesting because I've heard the word risk. You mentioned a couple of times, Jesse mentioned it a couple of times. So that's definitely a characteristics which comes with result-based finance. Let's hear Martha. Is it okay if I start with you?
Yeah, before we go to Martha, there's one more group that we're missing, and that's from Brenda Kiramuthemba. Should we ask Brenda to come back to the screen?
Brenda, do you have 3 points or the main issues? Very good. Thank you.
Yes,
Brenda.
I was in the group that looked at traditional stakeholder roles in results-based financing, and there was particular discussion on the role of government. And one key thing that came out is the need for government to be influenced to open up to results-based financing. They may not be playing an active role right now, but I think through advocacy and engaging them, they're able to open up to this. So there's some work required there in terms of advocating. And then there's also an interesting discussion around the fact that results-based financing follows a kind of contract mechanism. Therefore, there is need to have a stable environment where, there's trust to invest in results-based financing. So you have to have an enabling environment which is best provided by the government. We also had a special example still from Uganda that government already is doing something in this regard. Government is providing security for these assets that are installed. Government has opportunities of training and capacity building. So there's already something happening. And I think we do have an opportunity to be able to engage them more, to open up to results-based financing. Thank you.
Thank you very much, Brenda, for your very concise and clear summary. And I think you also gave us a really good bridge to go to Martha. Martha, from the government of Uganda, and we've already heard from Brenda that the government is doing a lot, and you're sitting together. So please, how do you envision what could be the role of the government of Uganda? And particularly look at the cases of Kate and Pamela, which they presented.
Thank you so much. I'm glad to be here, and I'm liking the conversation about results-based financing. I would think that the role of government would fit more in outcome investment other than being the outcome payer, because by the nature of government, the interventions that they undertake must be seen to be nationalistic in nature and inclusive to the extent possible. So if I take the case of Uganda, we manage or we run service delivery on a decentralization kind of model. So the district local governments bear the burden of service delivery, but this must be supported by local revenue, yes, but also with support from central government. So in Uganda, we already have conditional grants that support sanitation. For example, we have about $500,000 per year that goes down to districts, that's the total, to take care of demand creation activities and making sure the enabling environment is taken care of for that matter, to enable sanitation awareness creation to take place. So if I looked at an option of having government, or the possibility rather of having government as an outcome investor vis-a-vis an outcome payer, it would suit better with the outcome investment because it already is happening and it is inclusive in its nature. Yeah, so
but Martha, can I ask a question there? Because it's very interesting. And I joined the group, and then also the government was mentioned as investor. And then somebody asked, but interesting, if the government is the investor, then who would be the outcome payer? And do you then still need an outcome payer? I mean, do you have already ideas on this? So if the government is the investor, who would be the payer?
The payer would be someone else. It wouldn't be government because the very nature of government does not allow it to invest in that way very easily, although it is something that we should look at in the long term or going forward. You know, with results-based financing, it's already putting some people ahead of the others. And then, of course, based on performance and things like that. But government must be seen to serve everybody. So it suits better with the investment part because like in Uganda where we have decentralization, there is already a conditional grant that goes to the district local government. Government is already investing in terms of availing these conditional grants to the districts to enable sanitation work to go on. So
Martha,
yes,
can you, because I'm also interested to hear the ideas of Alan from the city of Kampala on how he looks at the role that Kampala, the city of Kampala, can play as an outcome payer or more on the investment side. Is that okay if I go to him now and ask him that question first, and then we come back if time allows, because I know we're short on time. No problem. That is all right. Ellen, can you please share with us your views on this issue? How does the city of Kampala look at result-based finance and their role in that?
Thank you very much, Jacqueline. And I think firstly, the ideal situation would have been for the government, including the local ones like Kampala City Authority, to be the outcome payer because they are interested or investing in the public good, which would then be better visualized or seen at an outcome or impact level. However, the reality on the ground is that there's still a huge backlog in terms of coverage, in terms of access, in terms of safe sanitation, that necessitates for government to also come in and play the role of an investor. And this is usually done alongside approaches like the market-based approaches that were shared by Kate and Pamela earlier on, trying to come into partnerships with the private sector. And in this instance, then the investment of government is to ensure that there's an enabling environment for the private sector to get a return on its investment, but in the process, advancing the public health good of sanitation. So I think the ideal is being an outcome payer, but the reality is that for now, because of the backlog, governments will play the role of investor as well. Back to you, Jacqueline.
Okay, thank you very much. It's interesting, and it tells you also that, we heard that many times, also from the keynote of Rob, that there are pros and cons, and it's not result-based finance is not an easy trajectory. But we also know that subsidies alone, it will not help us to achieve the SDGs by 2030. So I really like this discussion. I know we are running out of time, and I know that there are people who have put questions in the chat. So I would like to ask Carolina or Janine or Lauren, please, you looked at these chats. What question is there, and who just share with us, please.
I have some questions, Jacqueline. Yes, I'll merge them because there's a few of them. People is interested in learning more about how you allocate, how you go through this risk allocation. Can you elaborate a little bit more? And all the risk is on the investor, or the government also can take a part of this risk. That's one part. Another one is that what risk premium has to be paid for an implementer to take on the risk? Over and above what will be paid under a grant agreement, for example? Is it 10%, 20%, 30%?
Yeah, very clear questions. I think, Rob, you are the one who could probably answer these questions.
I can and I can't, in that there are no fixed answers. I mean, the point around the risk premium, and we're not talking about commercial rate of returns. We're talking about a type of investor that's very focused on social impact, but works in a way that they want to have their capital back so they can recycle it into something else. Now, what sort of return should they have over and above getting their capital back? That's a peculiar question for negotiation. And in the programs that I've seen or been involved in, it's always less than 10%. It's usually a few percentage points. In a way, the level is not the level's not important. It's the principle of having a program that's ambitious for impact, but is not financially totally unviable from an investment perspective, and does allow capital to be recycled, and with a small margin essentially to pay for the costs incurred as they go. That's how I'd frame it. Do you want me to tackle the other part as well?
Yes, please. And maybe one question from my side. If you say that the margins are relatively small, you're basically looking at impact investors and investors who are not looking at high returns, at least not at returns which really reflect the real risks.
Correct. We're not talking about commercial investment here. So in a way, I guess my message is when we talk about investment, people shouldn't be thinking like Wall Street and stock exchanges and all that sort of stuff. We're talking about social investors who, in a way, are even more socially oriented than a traditional impact investor, but we're very much at that end of the spectrum. So just as an example, there are foundations out there who have traditionally been grant givers, but because they want to move to a model where they put their money out and then recycle it for the next program, they're moving to have a mixed model of grants and impact investment. So that's what I'd call a social investor.
Okay, that's a real nice one. Thank you. And maybe because I'm sorry, because we really squeeze in time, and we try to see what if we can tackle a few other questions. Carolina, I think you had a few other ones, right?
Yes, I have a couple. One is, what kind of lifetime are we talking about between the investment and the repayment by the government based on outcomes? That's one. I'll throw a couple more. Are we talking about attribution or contribution when measuring the result? And the third one, can this approach also work in very fragile contexts?
Okay, that's good questions. I'm looking at the panel. Anybody willing to answer this question? Able to answer this question?
I'm happy to give it a go, but I want others to speak as well.
You have experience, so it's okay. It comes to you. These questions end up with you. So happy you're there.
I think Marta is also there.
Yeah. Perhaps I just could talk about the timeline, and someone else could talk about the issue of fragile contexts. Are there ever any situations where this kind of approach is inappropriate? Are they too fragile, or they're too low income, or possible issues around conflict? Someone else can answer that. In in terms of timelines, well, in a way, if you're thinking about paying for outputs, the time lag between an activity and the output can be quite short. So the activity might be procuring bricks and mortar and concrete to install a latrine, and then it's commissioned, and then it's ready. The outcome that might result from that output could be, I mean, depending on what you're trying to measure, could be a number of years. And of course, the longer the lag, well, the more the risk things might go wrong in that sort of transition between an output and an outcome. So there's no black and white answer, and it's really a question of for me, what's the right balance between an ambition for a program to be impactful versus realism, being realistic as to what is really feasible in terms of things going wrong in terms of risk.
Thank you.
But what I would say is that what you traditionally would see is a longer lag, a longer distance. The more you get towards outcomes, the longer the lag between the activity and the payment for it. And what that means also is that someone who's prepared to provide some upfront working capital becomes more and more important, because a service provider or a social enterprise may only have a certain amount of money in the bank to do things, and to have someone who's prepared to finance it up front becomes increasingly important.
No, and I have just to collaborate on that. The shorter the time is between measuring result and payment, even you could do it every month or whatever. From a cash flow, the better it is. But this, I mean, we need some more sessions to further discuss all these technicalities there. I think Martha, you wanted to add some comments here, and I think we almost have to close with you. So Martha, please go ahead.
Thank you. I wanted to comment about the issue of fragile situations. I would say that in the short run, yes, the system would work, the approach would work, results-based financing would work in the short term. But in a context like Uganda, where people go on to move away from, for example, refugee camps, and they're put into refugee settlements, then we start to look at a more sustainable and long-term kind of interventions, where we must consider also the host communities. In Uganda, the refugees are hosted in districts, and you find that there is a lot of integration with the host communities. And in the spirit of rehope, we would not want to see the refugees in a better situation than the hosting communities, for example. So in the short term, when we need quick results and people are in a camp, and then there may be reception center, and we must measure what partners are doing and how much money is going into what. Yes, results-based financing would work very well, but going forward, when people move away from that kind of setting, I think it would start to get a bit of challenges, and we might want to think about something else. Thank you.
Thank you, Martha. I think it's a super valid remark. It's about the whole context. We can't look at just the project. We have to look at the wider perspective as well. I think very valid. I think we have to close this session here.
At least the panel, Jacqueline.
Yeah, and it was super. And hey, Carolina, Valentin, would be nice if we could come back next year and see where it went, right? And how it was structured. So give it some follow-up. Okay.
That's absolutely the plan. Thank you, Jacqueline. Thank you to the panel. I would like to ask one more time Jim to come to the screen and show us what he did out of this discussion. That was really interesting listening to Martha, Alan, and everybody. Jimmy, what do you have for us? And while Jimmy puts the screen more colorful, and I see he listened to your suggestion, Jacqueline. That was a very good one. It is really great. Thank you, Jimmy. And with this, I would like to invite everyone to go and get your champagne glasses or your wine glasses and join us, get a little bit more comfortable and sit a little bit back, because now we're going to go to a pre-lunch and a little bit of a celebration. So Valentin Post, what are we celebrating today?
Thanks, Carolina, and thanks, Jacqueline, and others for the excellent session. We are going to cut our session a little short by 5 minutes, so I think we'll manage with the team. So what we're going to celebrate is the pre-launch of the Sanitation Water Impact Fund series. By the end of this year, we'll have a full official launch, but Stockholm has the privilege of having the premiere announcement of the Sanitation Water Impact Fund series. This originates from an idea which started many, many years ago, and I'm talking about more than a decade. We had this idea that we could look into other kind of financing into the sector. And it took courage to put an idea into practice, and we also needed support from grant support, which DGIS, the Dutch government, realized at an early stage that this could be something, a game changer. So they supported us throughout over the years, and we'll hear from Karen shortly. But then from the idea of having a pipeline developed for microfinance for sanitation, still to put it into a Sanitation Water Impact Fund, we needed to test a lot of ground, and we needed to test the water, so to say. And a couple of years ago, we did a proof of concept. That was a $3 million commercial investment into one of our partners to test the various elements. So based on the findings from there and the sort of long partnership and the trust in working together, I think that's why that's the reason, or that's what we're celebrating. Yes, we are now ready to do a pre-launch of the Sanitation Water Impact Fund series. It's a 250 million euro series. Carolina, is that answering your question? I guess so, right?
That is. I would like to ask maybe the slides to come back. And while you're talking about that, Valentin, I was thinking, you know, there's a lot of organizations and different entities involved. So what are the role of the various organizations here? So, maybe you would like to invite our keynote to...
Let me invite the supporter from the early stages. That's from way back in 2008. That's the DGIS, that's the Dutch government, development cooperation, in particularly innovative green growth. Asking the head of the water section, Karin Roelofs, to give a keynote address. Over to you, Karin.
Thank you, Valentin. Good afternoon and good evening to all of you. Thank you for joining us. First of all, a big thank you also to Finish Mondial, Waste, Actiam, AMREF, Aqua for All and Water for People for organizing this important session about innovative finance. We all know that water-related investments to climate resilience and delivering on the Paris Agreement are crucial. Fortunately, this recognition is growing. The theme of this Stockholm Water Week, Building Resilience, reflects the importance of water solutions to combat climate change, both through adaptation and mitigation. One of the key challenges the water sector faces is access to finance. Attracting different financial resources, both public and private, will be crucial when we want to accelerate on SDG 6 and other water-related SDGs. We do need to invest in water. The World Bank recently estimated that the scale of global economic losses related to water insecurity could be up to $260 billion per year as a result of inadequate water supply and sanitation, $120 billion per year as a result of flood damages to urban property, and $94 billion a year as a result of water insecurity to existing irrigators. Water-related losses in agriculture, health, income and property could result in a decline by as much as 6% of GDP by 2050, and lead to sustained negative growth in some regions of the world. The Netherlands supports a range of financial innovations in the sector, as the cost of inaction will likely prove to be devastating. It is why we are proud of the recent partnership between Waterworks, which is a collaborator of public water operators, and Finish Mondial. This new partnership will build sustainable water facilities for underserved communities, so contribute to achieving the targets of SDG 6 and also support the global effort to tackle COVID-19 through improved wash for all. It's why we also support Aqua for All in their continuous development of innovative finance and investment solutions. Aqua for All operates in low-income countries with a market-led approach. Scalable solutions and capital are instrumental to bridge the service and financial gap in the water and sanitation sector. With their proven approach, they enable third-party investments through blended finance as well as innovative finance structures, with the result that small and medium-scaled enterprises in water and sanitation are investment ready and can scale up. Under the public-private partnership spearheaded by Waste, the Netherlands has supported Finish Mondial since its inception, and it has had some tremendous results. Let me highlight a few of them so that they can hopefully feed the discussion hereafter. Waste has implemented the Financial Inclusion, Improved Sanitation and Health approach, or FINISH, since 2009. It has combined the financial sector, government, sanitation businesses, and communities in one dedicated program. With a modest grant of 5.7 million euros, well over 150 million euros has been mobilized locally, and more than 1 million sanitation systems have been constructed. That is very impressive. In 2013, Finish moved from India to Kenya, and only a few years later expanded to Bangladesh, Ethiopia, Tanzania, and Uganda. Based on their track record, Finish Mondial will likely mobilize at least 250 million in local funding the coming years. Let me highlight an example of the work Finish and Actiam developed that I'm very proud of, the Sanitation and Water Impact Fund series. Targeting institutional funding of pension funds and insurance companies to the wash sector is new in the Netherlands. For institutional investors to start investing in developing countries is really unique. This only has been possible by working together with all stakeholders and jointly exploring innovations. The partnership can be a game changer in the wash sector to receive more and different kinds of funding. At the same time, we are not there yet. We need to move faster and we need to scale up even more. That is why we invite other donors and development partners to join us and strengthen and scale the Finish Mondial partnership. These innovations include the possible use of a water sector trust fund we have at the European Investment Bank to become co-investor in the Sanitation Fund. We also jointly explore the use of guarantees of the European Fund for Sustainable Development Plus, windows for this Sanitation Fund. These are prime examples of the way innovative finance solutions and multi-stakeholder dialogue should function, through collaboration between private and public partners. Partners that work with the local actors who know the customers, who are familiar with private business and the financial sector, and have good relationships with the local government. Let me close by highlighting another important topic for the water sector, and specifically our partners that are experts in innovative finance. As you may know, the Netherlands and Tajikistan will will chair the UN Water Conference in 2023, the first of its kind since 1977, almost 50 years ago. In our efforts toward 2023, the UN Global Acceleration Framework on SDG 6 will be a crucial guiding document to help raise ambitions on the acceleration of SDG 6 internationally. One of the accelerators under the umbrella of the Global Acceleration Framework is finance. The Netherlands, together with its partners, will urge the international community to step up its ambition on access to finance for water interventions. We are committed to show the potential of innovative finance approaches and close the finance gap. The 2023 conference cannot become another stock-taking event, but must be the moment we can show concrete and tangible results on all the accelerators: capacity development, information and data, innovation, governance, and last but not least, finance. And we are going to need all the innovative finance approaches to deliver on our Dutch goals: safe drinking water to 30 million people and safe sanitation to 50 million people. Let's use the promising results and the lessons we learn here to scale the ambitions of all relevant stakeholders and radically increase finance for the water sector. Thank you.
Thank you very much, Karin. That was a very inspiring speech, and I think it frames really well what the partners are doing with this initiative. So thank you for being here today. Now I would like to go a little bit more deep on this initiative, and I will ask Theo Brouwers, Managing Director of Actiam, to join us. Theo, can you explain us a little bit more about the concept?
Yeah, sure. Well, first of all, thanks for having the opportunity to present this. And I'm indeed, as Karen was already mentioning, and also Valentin, and I'm very proud that we are coming so far, despite the fact that still no euro has been invested, but I know what we have done so far. And I'm very confident that this in the end will be one of the success stories presented on the conference, the water conference in Tajikistan, I hope, Karen. But anyway, just a very short introduction of Actiam, because I think that's necessary looking at what I'm looking for, what we are looking for. Actiam is part of Athora, which is an insurance company in the Netherlands, the second largest insurance company in the Netherlands, also active in different other countries. And Actiam is the asset manager. And I'm responsible for the impact investing team, which is looking for investments in developing and developed countries where we combine social return, financial return, into a product proposition which is suitable for commercial investors, institutional investors. And I think that is very important to emphasize that. Since 2006, we have raised about 800 million euro to invest in the financial sector in emerging markets, in the microfinance sector, and in the SME banking sector. All these investments are being done in a way that the social return and financial return has been combined. We have disbursed more than 4 billion euro private debt investments in the financial sector. And the commercial investors have been satisfied with a good return. And I think that's exactly our aim, because I have listened very carefully in the last 1.5 hours of this session. And I have heard names of social investors, I have heard result-based investors, outcome-based funders, but really institutional investors I haven't heard. And also if I'm looking at the participants list of this conference, there are no or hardly no commercial investors in this conference, institutional investors. There are hardly no asset managers involved in this conference. So I think that's a huge missing part of the greater challenge which we face as a world to realize the SDGs in 2030. And we all know that private investments, commercial investments are needed for that. So that's surprising. And I hope that the Water Conference in 2023, that there are more players than only Actium, because I really volunteer to participate in that conference. For us, the biggest challenge is how to bridge the gap between commercial investors, institutional investors, and SDG problems, challenges, and now especially looking at SDG 6. And for that, we need partners, we need supporters, we need organizations, institutions who can help us, who can support us. And that's the main approach how we came to this Sanitation and Water Impact Fund. You can see now that there are 4 players. Of the fund manager, that's Actiam, who is responsible for the investment opportunities and the fund structuring and all the usual stuff which you can expect from an asset manager. We use, for selecting the financial institutions, investment advisor, and we use the technical assistance partner to make sure that the demand for sanitation is there. And for that, we have selected Finnish Mundial as our technical assistance partner. I'm very familiar with them because I'm already a board member since 2009 of Finnish, and I've seen them grow, and I've seen the results. I've seen them also building their own track record, and we were waiting for the right timing to capitalize on that track record, so that we can really use the experience and knowledge of Finnish Mundial to transform that knowledge into this proposition. The 4th partner is an outcome-based funder. And for that, we have agreed with Aqua for All that they are willing to take this role. And I'm very grateful to them, because without them as our partner, we couldn't even do our pilot, which was mentioned earlier by Valentin, which we have done with Kashpur and Microfinance Institution in India, where also Aqua for All was responsible for the outcome fund. So can you go to the next slide, please? Because I know that I have less than 10 minutes. How we are going to do it? So we will target our investors. We are now in the midst of the fundraising. That money will be invested in the impact fund, the sanitation fund, which will lend to financial institutions. Those financial institutions, they have a dedication clause in the loan agreement that they need to use the money to lend to households and micro entrepreneurs to build and sustain safe sanitations and water facilities. To get the results, which you can see at the right this slide of the number of safe sanitations and all the other targets which we have written down. For that, it is extremely important that we need the technical assistance for getting there for financial institutions, that they know how to employ, how to use the money in a right way. And the Finnish partner is responsible for the awareness creation, is responsible for the supply side development, is responsible for the training for the masons, responsible for the training for the loan officers. A lot of things that need to be done to ensure that financial institutions are doing the right thing for the right purpose. And if this is all done in the right way, we get these results, which will be verified by an external verification partner, which will go to Aqua for All, where we are now discussing for the impact framework, which gives exactly when will the 1% interest rate discount be paid if the certain impact targets are being met. And this is important because you have to imagine that financial institutions, they are very reluctant to work with this safe sanitation system loans, because in the end, it is not income generating loans where we are talking about. And it is something which is not a general product line which they are using. And by offering them the technical assistance part, by offering them this interest rate discount, we hope and we succeed in convincing financial institutions to work together and to being part of this program and to use their outreach for reaching out to those 5 million and 25 million households. So that's in a sense the role of the different partners. And if you're looking to the next slide, in short, these are, let's say, the specs of the impact fund, where we have a clear fund structure, which is based on a 3 years loan tenor. We start with 50 million. I think that's also necessary to start small, to make also to convince institutional investors that we are really doing it and that we can do it. And by showing them that we are really aiming for 250 million, we can also reach out to those institutional investors who don't want to invest 1 million, but are willing to invest 10 or 20 or 25 million, but don't want to be 50% owner of the fund. So that's the reason why I think it's also important to show them that, yes, our aim is not 50 million, but 250 million. The target return is 2 to 4%. And that's also, if you're looking at the risk return profile of investing in financial institutions in emerging markets, this is market-based. And that's really important that we have this target range, because, for example, if this 1% discount should be paid by the commercial investors, institutional investors, that won't happen, because then they lose 50% of their net return. So that's the reason why I am extremely happy, but also it was necessary that we have Aqua for All on board. And again, based on the ESG impact framework, I think that we can add to the challenge of SDG 6. It's not the solution. I think it is necessary to get into the sector of institutional investors. This is, I believe, a really unique opportunity to get them on board. So I'm really looking forward to execute this program and to make sure that we get them on board and that we reach the results in the end as promised in the information memorandum and in the slides.
Theo, I'm gonna have to ask you to pause now because I want to leave some of the good discussions that we're having already for the panel a little bit. But before we get to the panel and we add to what you were just saying right now, I want to ask, how do we get to this fund? How do we develop a pipeline to make this initiative possible? And I would like to invite Abhijit Banerjee, Managing Director of Finnish Society and Country Coordinator of Finnish Mondial India, to join us now. Abhijit.
Thank you, Carolina. It's a great pleasure to be here and to share the India story. I'm particularly thankful also to Actium that we are able to partner with them for the this sanitation impact bond. It's like a dream come true, because we have been working on a credit-driven sanitation approach since 2009, thanks to DGIS support and with waste showing the way. And can we go to the next slide, please? So while we have been over the years, in about 10 years time, we have been able to reach about 1 million families. But more importantly, I think what we were able to establish is the credibility of the model, that it is possible to do sanitation, even though India always had a subsidy approach to sanitation, that it is possible to drive sanitation using credit. And there was, of course, a lot of skeptics that we have encountered along the way, but then we have been able to develop an understanding of the market and develop a robust model. So can we go to the next slide, please? So the model that we have been able to develop, this has enabled us to deliver about a toilet every 4 minutes. And in order to do this, we have been, over the years, we have been able to, achieve not only efficiencies of scale, but made our model more and more effective. And today we use about, 5 euros to deliver capacity building inputs, both on the demand side and the technical side to the microfinance partner, provide them with hand-holding support, do concurrent monitoring, and also provide out of this 2% an outcome-based incentive to the microfinance partner with whom we are working. Microfinance institutions with whom we have been working, and with many of them we have very long-standing relationships. They value this, and what we see is that today microfinance institutions understand that this is good business for them. It helps them to diversify their portfolio, also addresses a social agenda. And because their clients are, because of sanitation, they're healthier. So what we find is that the repayment rate is very high. It's like 98, 99%. And so it's good business for them. And our focus has been, this model has focused typically on safe sanitation and a toilet which does not contaminate the water and which is also actually used. So this approach is based on the diamond model of waste, wherein we try and bring together community, businesses, and the financier and government, so that it's an integrated approach to the entire thing. And this enables us to deliver the kind of results that we have been getting. Can we move to the last slide? So on the pipeline development, see, this process has already begun. We are already working on this, and we have been able to put in place a dedicated team for the purpose with the required background and, of course, the passion to deliver results. And microfinance partnerships, what we are doing is this, that we have our process which has been tested over the years on how microfinance institutions which have a social orientation are selected. So we have tried to have a mix of such microfinance institutions from different parts of the country. Our operations are spread across 11 states in India, and we have a mix of microfinance institutions of different sizes. So thereby, what we are trying to ensure is that there is no risk of delivery. We also have strategic partnerships. We have partnerships with Sadhan, which is a network of 200 microfinance institutions. We have a partnership also with Water.org, another very strong player in the sanitation financing sector. Besides that, we also see opportunities coming up when we talk to microfinance institutions in water financing and also for business promotion. Because when we do sanitation, there is a ripple effect of that as far as the entire sector is concerned. Every toilet that we build, it creates livelihood for about 10 people. And there is also the association of businesses that are there. We have carried out studies to see that the kind of demand that is there. So that today the demand exists for not only new toilets, but also for retrofitting, for upgrades of facilities that are there. And that's where this support or this funding, the finance, the bond from Actium could play a game changer in this sector. And we are very excited about this. Currently, we have this year itself, we have already partnered with about 24 microfinance institutions. And these microfinance institutions, even with COVID raging, they have been able to till now deliver about 50,000 toilets using a credit of approximately about 17 million euros. So that's the India story. And
thank you, Abhijit. I think we might have some questions from the audience after this, but I would like now to ask Yosin Slaus, Managing Director of Aqua for All, to join us. And Theo mentioned Aqua for All. Abhijit was talking about investors. I would like to ask you, Yosin, why does Aqua for All and how take the role of incentive payer in the Sanitation and Water Impact Fund?
Yeah, thank you so much, Carolina, and welcome to all of you that are joining this session. It's my great pleasure to be part of this group of speakers and play a role in the coming launch of the Sanitation and Water Impact Fund series. So in order to answer your question, Carolina, I think it's good to first highlight a little bit of what Aqua for All does. We're a not-for-profit organization that was established in 2002. And over the years, we have already allocated and managed fund of 150 million euros. We reached almost 6 million people, and we worked with 200 organizations in Africa and Asia to provide access to safe drinking water and proper sanitation. So we decided in our current program to be the partner for bridging the service and the financing gap. And the reason why we do that is because the gaps are big. We all know the figures in service delivery, and I think that even Karen and both Theo highlighted the fact that, the financing gap towards 2030 is huge. It's a multi-billion-dollar figure that we need to bridge. And with climate change coming up, this will exacerbate the financing gap even more. And so we have no other choice than to use our grant funding in the way that is most promising to bridging that gap. We need to catalyze private capital into that market. And this is the reason that Aqua for All chooses to work with impact investors and financial institutions to make sure that these gaps are bridged over a period of time. So what is Aqua for All's role, and what is it that we do? So we co-design de-risking structures for not only financial institutions, but also in collaboration with impact investors. And we do not only co-design, but we also invest in de-risking facilities. So Abhijit, you already mentioned our collaboration with water.org, and they've set up a global guarantee fund together with IFC, in which we invest in their junior tranche. But we also invest in first loss tranches, such as in the investment fund that is currently being set up by Incofin, and that's also going to be launched probably by the end of the year. This is a fund that provides equity to enterprises in the sector, and on top of that, we also invest in impact incentive structures. And it was mentioned before, the pilot with Cashport in India, we were one of the partners in this, also providing incentive payments. And this indeed has been very, very encouraging. And this is why Actiam decided to set up the Sanitation and Water Impact Fund. What we also do is not only working with those financial institutions, but also incentive payments for entrepreneurs, which is also much needed in the sector. Also in the Finnish program, in our work, we collaborate with small and medium-sized enterprises, and in order for them to reach out to more remote areas and to be able to scale, those incentive payments are much needed. So the work that we do on TA trajectories is also something that is much needed in the sector. So alongside all those de-risking instruments and facilities, we see that technical assistance is needed. And as the Finnish Mondial program is providing in the market to really understand what the sector looks like, how you can incorporate, we also decided that alongside the Sanitation and Water Impact Fund series, there's need for technical assistance for financial institutions really to build up this WASH portfolio. And if we then want to attract more private capital, we need to show and verify the impact that we claim that we are realizing in the market. And therefore, alongside this deal, we're also working on a framework and to make sure that we're going to verify this framework in the market to really attract, as Theo was mentioning, also pension funds, and really show them that successes can be realized here. I think that I want to move to the next slide, in which I just put a little bit of an overview. I think it helps us to understand what financial institutions need in order for them to embrace water and sanitation as an asset class. So Actiam in this case is providing that liquidity. And what we see, not only Actiam is providing liquidity, but there are also others. And what you see is that there's a huge need for de-risking as well as technical assistance to be successful in this market as an investor and as a financial institution. And if you then look at de-risking, what is out there? So it could be either guarantees or first loss. It could also be incentive payments, and all of these options are possible for Aqua for All to invest in. And so if you then decide that a certain de-risking structure is needed, it also needs to be designed well in order for us to really claim impact. And so the terms and conditions, as also already Theo was highlighting, needs to be designed very properly. And then if you look at the technical assistance, per FI, and that is our experience in the market, there is a range of different kind of needs in order for them to build up this WASH portfolio. It could be either understanding the market, it could be incentivizing the market, but it could also be to work on their MIS systems to be able to report on it. And these are just a few of the examples. And it's our great privilege to work with Valentin, with Theo and their teams to make sure that this first of its kind fund series is going to be a success. Because as an outcome payer, we are going to provide 1% on an annual basis, So, you know, in total over the 3 years, that will be 1.5 million euros, depending on the impact reached. And we're designing it in such a way that we anticipate that the 100% of the outcome payments that we have made available will be paid out. Thank you.
Thank you, Yossi, for that very insightful presentation and response to our questions. I think we're running out of time. The conversation went really interesting, was very active. So I would like to ask all of you to come back to the panel. So Valentin, I think, has a question for each one of you, and I would like to ask you to stick to 1 minute per answer. I know that's hard, but we want to also invite everybody to continue this discussion after the session. We are just starting the conversation here. We want to follow up after the session with each one of you, and we're open to welcome one-on-one meetings, etc. So please, Valentin, your floor is yours.
Thanks, Carolina, and thanks all the speakers. Yeah, I do have a question for each one of you. Let me start with Karen. Karen, the global acceleration framework of SDG 6 has indicated that finance is a key accelerator. Now you're co-hosting this conference together with Tajikistan, and you already talked about, no, we cannot do it alone. What sort of contributions, or what are you seeking for from others? Be it governments, be it donors, what sort of thing are you looking for, and how do you suggest or recommend, because we may have some of the potential supporters in the room today, how do you suggest they approach this subject?
Yeah, thank you, Valentin. We need to accelerate the implementation of SDG 6, and one of the accelerators is finance. If we really want to achieve something, and if we want to ensure that innovative finance really gets a boost, I think we need to convince other partners, we need to convince other actors, be they donors, be they international financial institutions or private funds, whatever. We need to convince them that this is also one of the really serious ways to generate more funding. And I think we can do that by showing some very successful initiatives. For example, what you have done together with other partners in Finnish, what Aqua for All is doing. So I think we really have to ensure that all these successful initiatives are getting enough attention from relevant actors who are able to contribute to this goal.
Thanks, Karen. Actually, it's a nice bridge also to Theo. Theo, you're the only asset manager here. What does an asset manager do in the war sector? And secondly, how do you see this market developing? What is for you the real bottleneck?
Yeah, thank you. Very good question. I think that first of all, we have access to the institutional investors. So we know their language, we speak their language, and we know what their hurdles are. And what the first thing we need to do is create awareness about their role in this whole spectrum of SDGs, what we are talking about. So that's the first role. The second role is education. I think that it's really important that we speak as much as possible with investors. What is this sector? What is really necessary in the SDG, and what are the opportunities? There are a lot of opportunities, and that's also where the role of an asset manager is important. That they need to connect the institutional investors and the supply of interesting projects. And how do you do that? It is by transforming interesting projects into investable products especially in the non-listed area. So not everyone can go to the exchange and list their project. It's especially the non-listed part, the private debt, the private equity part. That's the really interesting part. And that's where asset managers really can catalyze commercial capital. As already mentioned, we need commercial capital to realize all the SDGs.
Thanks, Theo. And it's like it's on purpose. No, you're actually creating a bridge to the next panelist. That's Abhijit, because you can raise money, but you still need something to invest it in, right?
Right.
And Abhijit, how do you talked a little bit about the projections, but suppose just give an example. Theo raises 1 billion euros tomorrow. How fast can you deploy it in India, and what sort of thing would you need for this?
Thanks, Valentin. So, we did a demand assessment for UNICEF in one of the states, which is Bihar. And this study was carried out in 2019. And what we found is that in the euro terms, the demand is about 383 million euros. So of course, not only new toilets, but also retrofits and upgrades. And for the current year itself, if you see, we have already done about 50,000 toilets, right? And they have been all microfinance driven by the microfinance partners that we have contracted, and which is valued at the credit mobilized is somewhere around, if I recollect correctly, about 17 million euros. And by the end of the year, we will be reaching about 150,000 toilets, approximately about 35 million euros. So I think Finish in India is geared to absorb Theo's, the funds that he is planning to deploy. He should be able to deliver.
Okay, thanks, Abhijit. That's a consolation. Let me go over to Josine. With Josine, you are from Aqua for All, and we have been working on the Sanitation and Water Impact Fund. Now, we have been talking so far about sanitation. But can you please say something about water? Because that's also, I think, an important element in what we try to do. So how do you see that? How do you see the pipeline development underwater?
Yeah, thank you so much, Valentin. I think it's important that we mention that Finish Mondial initially focused on sanitation, but once we started to roll out in the other countries, we also decided to embrace water because it's so logically tied to sanitation, isn't it? And I think also for diversification matters, I think it's extremely important that financial institutions can decide whether they want to focus on, how to present their own products. So we shouldn't push only for like sanitation, but also allow them to choose what is in their vicinity that they would choose to lend to. And so I'm very happy that we decided to agree on sanitation and water impact fund rather than only sanitation. But I also do agree that there's huge potential both in the sanitation sector as well as water. And I'm not at all afraid that, there's not enough availability because, especially, for example, in the Kenyan market, we work with financial institutions that over a short period of time were able to mobilize quite a lot of funding, but also invested in the water sector. And yeah, in that sense, there's no doubt in my mind that we can allocate that kind of funding towards this. And I just wanted to highlight that, Theo, you in the Netherlands are one of the first impact investors that embrace water. And it's so needed that we also make sure that we reach out to other impact investors because the potential in the market is huge. The gaps are huge and we need to start catalyzing more capital. And, you with Actiam are setting such an example in the market that it can be done. And then tying into what Karin is saying, these kind of successes are needed in the market because once they are out there, we can convince others to join us in our effort and, you know, providing private capital. And this is also a call to the people that listen in, that maybe represent foundations, because Aqua for All said, of course, we're going to be part of the very important effort here and be the first incentive payers. But we want others to also take their responsibility and, you know, provide this kind of funding, not only for the next tranches that Actium is going to launch, but also to other impact investors. We just merely set the example. Thank you,
Thanks,
Valentin.
Josie. You did sort of a summary for me, so I don't have to do that. But that's fine. That's fine. Yeah, Theo, I think for you there's a task ahead with the Global Impact Investing Network, which I know you're a prominent member of. So I know there was already a WASH session last time in Amsterdam when the global meet was there. But I think it calls for another session. And I know, thanks, Karen, for sharing your insights and your call for people to join. And thanks to all the speakers. I think, Carolina, we have 2 more minutes.
We have one more thing. We have the result that Jimmy worked on. So I'm really curious about what Jimmy came up with after all this discussion. While Jimmy is showing us his screen, Valentin, I think the panel really summarized the key messages to take home. But I have still a question. How can others join? If somebody wants to really get involved in this initiative, what should they do?
Is that a question to me or is that a question to...
That's a question to you.
To me. Oh, okay, thanks. Well, the first thing is this is a pre-launch, right? So we still have time to the full launch. So they can contact us at any time, and us meaning any of the speakers, but they can do it through me or they can do it through you. That's we would like, this is a emerging partnership. So it is an established partnership, but like Karen was saying, we need more people. We need more people to join the fray. So please feel free to join us. This is not cast in whatever the expression is, iron or stone. This is something which is expanding and growing. This is an innovative partnership. We're learning from one another. And yeah, so please, my plea to everyone is kindly see what you can, how you can help, what you can do, how we can grow this together, because we know it's needed. We know it's necessary. And we know, we have heard, there is a market. There are people willing to invest. There's capital out there, but we need more partners on the ground and the asset management side. We need more Karens of this world. We need more Josines. So please join us to get to the SDGs properly realized.
Thank you, Valentin, and thank you to the panel. I just am very aware that we're gonna get kicked out of this room any minute now. Thank you, Jimmy. This looks fantastic. I think it really captures what we've been discussing. So good job there from Australia. I know it's very late or very early in the morning already. Please, like Valentin said, don't be shy. Engage with us. We are there in the Water Week. You can send us a message via the internal platform or reach out to the Finnish Mondial Project or Waste Foundation. Be happy to answer your questions and maybe schedule one-on-one meetings with either of us. And I'm sure we're going to have some follow-ups after the week. And we'll see you all hopefully next year with the actual launch.
Thanks.
Thank you, everyone.
Thanks, everyone. And cheers.
Cheers.
Yes, it's a pre-launch, right? Cheers.
Thank you very much.
Thank you. See you soon again.
Thanks.
Thank you. Bye-bye. Thank you.
Bye.
Thank you. Bye. Thank you. Bye-bye.